Thank you for making the time to watch this video. Let's look at a few more examples. So case A, we have a perpetual everlasting instrument. Therefore, there is no redemption date. A limited issues, so we've received money, debit, bank, credit, we don't know, 100,000, 12% debentures to be limited. The debentures are not redeemable, so the interest payments are everlasting, and they ask us to determine the classification in our books, in A's books. So do you agree that this contract will require the interest payments that will be seen as a liability? We're not going to look at the settlement because it's not redeemable, it was not convertible, so we will ignore. And then we will conclude that this is a financial liability because we have a contractual obligation to make payments. If we look at B, on the 1st of Jan 2001, A limited issues, again we've received money, but we wonder what is our credit leg. Preference shares at 1 million par value. The shares are irredeemable and dividends are not cumulative. Under the conditions of the issue, A Limited can determine the amount of distributions or dividends paid to the holders of the shares. So they can use their own discretion, and we have to look at the classification. Here, do you agree that we do not have a contractual obligation to pay the dividends because we can decide whether we want to pay it or not? So this will be seen as equity. Again, it will not be redeemable. As they've said, it's irredeemable. It's also not convertible, so I will ignore. And this is then seen as an equity instrument. For case C, we have zero coupon bonds, so this will be interest-free instruments. B Limited issues the bonds to C, so B Limited issues the bonds to C, requires no interest payments, but on settlement a higher amount is paid back. So determine the classification of the instrument in, and please change this to B Limited's books. So here we have interest all at once at the end. As they have to pay at the end a higher amount, this is actually all the interest at once. So this will be seen as a liability. There's no unconditional right to avoid this payment. The settlement will be in cash, a liability. So this instrument will then be seen as a liability.